You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it. You got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Boot Camp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, your Options Boot Camp drill instructors, Mark Longo and Dan Passarelli, will break it all down for you. Options Bootcamp is brought to you by tastytrade. Ready to shred your paper trades? Then trade at tastytrade, the broker that gives you what you need to make your own way. Get smarter every day with options education and research tools. Analyze your risks clearly with a potential profit and loss graph. Chart your way with hundreds of indicators. Make the numbers make sense and find the opportunities only you can see. Trade it with fewer clicks on an easy-to-use platform. Mobile, desktop, web. Supported by a trade desk with decades of combined experience. Stocks, options, futures, and more. You choose, you trade. Get what you need to make smart moves. Go to tastytrade.com/pod to see for yourself, genius. tastytrade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. Fall in boot. It's time to get into peak options trading shape. It's time for Options Boot Camp.
All right, everybody. That music means we are back once again. It is Education Wednesday time yet again for Options Bootcamp, the premier program for options traders out there. My name, of course, Mark Longo from the optionsinsider.com, as well as from the network upon which so many of you are binging out there these days. Heard a little bit of some fun new stuff there in the intro. We'll get those folks on here to join us on the show down the road a little bit to talk about all the cool things they have cooking over there and a lot of educational initiatives they have unfolding over there. So stay tuned for all that fun. Of course, if you like what you hear, this platform could be iTunes, could be your Google Podcast, could be YouTube, could be Audible, wherever you get the show, our mobile app. Throw some stars, a like, a comment. It does help new people continue to discover the show. Just like this week, 5-star review comes from Mr. Edge. I like the handle. Mr. Edge, he's out there hunting for Edge. He says, great show. Looks like I have a lot to catch up on. Well, thank you, Mr. Edge. And yes, you do. The show has been running for over a decade now, so you got a couple of hundred episodes to sink your teeth into. So enjoy. I do see a lot of you going all the way back to episode 1. I think that was 2012, something along those lines. So goes back a ways. So enjoy that journey, Mr. Edge. I've been hearing from a lot of you who have been taking that journey and are enjoying it. So, of course, if you have questions, hit us up. You know where to find us. But welcome to the club. Welcome to the family, Mr. Edge. Speaking of club, if you folks want to join a fun secret club, only one place to go, theoptionsinsider.com/pro. Once you're there, of course, gives you access to 250 some odd exclusive episodes going up on that Pro podcast feed, including great Pro Q&A sessions. Just did a deep dive into trading psychology on that last week. Yesterday, we went deep, hardcore into VIX and the whole universe of vol ETPs. So all you who are hitting us up after our vol episode recently, talking about how you're discovering all these different trading strategies in the vol space, and you have questions about that, yesterday's Pro Q&A was for you. Theoptionsinsider.com/pro, the place to go to learn more. as we learn who's joining us on the old program. Once again, I am pleased to welcome back my compatriot in all things options, education, crime, the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring. He was on the road last week, and now he is joining us on the tail end of his road trip once again via the magic of telephone. Mr. P, welcome back to the show, sir. You must be exhausted from all this road trip.
Oh, my gosh, Mark, you have no idea. I'm almost home. I can't believe it. I'm seeing cornfields. Cornfields. Do you believe it?
There you go. Out of the Bay Area and back into the cornfields as we keep on rolling right on into a little bit of the old options drills.
Colin Boots. Time for our favorite pastime, option drills. We're going to take the strategies learned during the show and teach you how they can be employed to achieve a specific objective. Do you hear me? Yes, sir!
All right, everybody, welcome to the Options Drills, the portion of the show where we take a little bit of a deeper dive into a particular option strategy or technique or something that we utilize in the world of options trading that we want to share with you here on the show. And today we're going to go back. We're going to rotate back to the wheel, pun intended, a little bit of the old revenge of the wheel, the infamous wheel of death that Matt and I were chatting about a couple of weeks ago here on the show. We also did, if you want more wheel listeners, we did a deep dive with Matt yet again, and also our good buddy, Mr. Uncle Mike Tusaw, who owes Mr. Dan a bunch of money here from years ago on the network. He's a big fan of the wheel as well. We did a deep dive into the wheel yesterday on the advisor's option. That went live to our pro folks. Hasn't hit the network yet. That'll be hitting the network probably later this week, so stay tuned for that if you want even more wheel talk. We've approached the wheel, carved it up in so many different ways, but we want to revisit it once again here on the show today, listeners, because all this wheel talk, all this wheel fun we've been having, guess who was on the road for most of it? The black-hatted one, Mr. P. So he hasn't had a chance to chime in and give his 2 cents on all this wheel fun. So I want to give Mr. Dan his old spin at the old wheel, if you will. So Mr. Dan, let's start there. The question I've been asking everyone lately, when I say the wheel to you, the wheel strategy, what does that conjure up for you? What are your thoughts on the wheel overall? You a lover? You a hater? What are your thoughts?
Mark, I am a lover of it if it's done correctly. And I feel like it's a little misunderstood, and I understand why it's misunderstood. Honestly, it was up until maybe 3 years ago when I just finally had this epiphany. And then I had a re-epiphany about a year ago and really, really dialed it in. So, yeah, what it conjures up to me is it's this combination, of course, of covered calls and cash-secured puts, and we rotate between the two of those on a somewhat ongoing, regular basis. That is how people generally think about it, but I've been studying it really, really hard, put a lot of time and a lot of effort into it, and I'm looking forward to sharing what I learned about it on the show today.
All right, listeners, of course, hopefully you listened to the episode very recently on the show, so you're familiar with the wheel. Quick refresher right now, of course. Wheel, you're selling a put to get into a particular underlying. Could be cash secured or all sorts of different ways to do it. Put spread. We debated that with Matt on the show a few weeks ago. He hates that term cash secure, which I understand. It's not quite as secure as it may sound by the name out there. So that's the way you get into the stock. And then once you have the underlying, you can, of course, ride it as a typical long equity position, or you could do the second leg of the wheel, which is, of course, sell a covered call to get out of it. Hence, the wheel rotates, you get in, rotates, you get out. Hopefully, you get paid on both legs. Rinse and repeat. Since then, we have explored a lot of fascinating tweaks to that. Of course, the one I just mentioned, which is selling the put spread, not just the put to get in. That's more of a risk management, whatever you're comfortable doing. Some folks are not comfortable just selling a put outright. They like to have that put spread in case the worst comes to pass. Obviously, not collecting as much income there, but if that helps you sleep at night, then by all means, go for it. And then there are the 201 or the even 301 versions, the one we talked about yesterday on the Advisor's Option Show, which will be hitting the network soon, where Uncle Mike kind of mentioned using a in-the-money call instead of selling the put outright, just going with a straight underlying and then selling an in-the-money call against it. So kind of tweaking it from that perspective. Then, of course, Matt on the show a couple of weeks ago mentioning his put calendar idea, which is really more of a wheel 301. If you're intimidated by time spreads and anything along those lines, and that's certainly not for you. But as you can see, the wheel can get as complicated and as adaptable as you need it to be, depending on your circumstances. So, Dan, we've talked about a lot of different flavors of the wheel. When you're talking about the MTM flavor of the wheel, what is it? How do you set it up? And what are some of these scenarios you like to use it in? And you mentioned you didn't really grok onto the use case for it until recently. So what was it that brought you to the dark side of the wheel, sir?
Well, to be clear, I've always, well, for a long time, for 20 years, I've loved the use case. But there was one sort of missing link, one sort of different tweak on how it's necessary to think about it that really turned the corner for me. So let me share what that is. So the way I trade covered calls and cash secured puts, or, let's piggyback off what Matt said. And I kind of like the term assignment secured puts. Because, I agree with Matt. It can be a little bit misleading using that word secured, as if the cash magically protects you. It doesn't. It just secures the assignment. So anyway, I treat them basically the same way most people do, except I focus on two things. So let me share what those two things are. First, I focus greatly on the objectives. Now, this sounds so intrinsic, just so mundane and basic, but it is the sole reason why people fail in trading covered calls and have it end up being a negative edge for them and lose money. People trade cash secured puts. We'll start with that one because that's the easiest one to understand and explain. And they'll say, okay, so the stock is at 120. I'm going to sell the 110 puts. And if it gets down to 110, I'm totally fine buying the stock at 110. And tell themselves. And then, just if you think about stocks as a log normal distribution, more often than not, they skate on the trade and everything's hunky-dory, but there's still a fair number of times where the stock falls below 110. And you know what those people who just got done telling themselves that they're totally fine if the stock gets down below 10 buying the stock, you know what they end up doing? They end up getting all pissed off. And they say, this is terrible. What the heck? I don't want to do this. Is there an adjustment? Oh, my God, I'm losing money. Oh, what am I going to do? And it's just so ridiculous. Like, why did you go and, tell yourself, that you're okay getting assigned and buying a stock at 110 if you are not? So the objective that must be like a handshake deal you make with yourself, not just, brushing it off, not taking it casually, but like in stone deal that you make with yourself is, do I want to skate on this or do I want to trade into the stock? Do I want to get assigned on? I just call it skate or trade. What do you actually want? And then you find yourself literally hoping for assignment or hoping to not get assigned. And if you hope to not get assigned, you already have a plan in place on how to deal with that. If you hope to get assigned, you know that a large amount of the time you're going to end up being down on the trade, but you look at it temporary. Just like whenever you buy a stock, you got about a 50-50 chance of, in the short run, in the next week or two being up or down on that trade. And it's the same thing with the assignment secured put. So setting that objective is the first. I don't want to go. Yeah, it is an epiphany, right? Like, I don't want to oversell it as an epiphany because it sounds so simple, but that is where most people fail. Okay, now you might want to. I don't know if you want to jump in here or let me just roll right into number 2. I've had a lot of caffeine on the strip, Mark, a lot of caffeine.
I just love how some people have, spiritual or other types of epiphanies. Dan has an epiphany about the wheel. He wakes up one night in a cold sweat and says, Eureka, I have mastered the wheel. I love that. Before we go any farther, really quickly, some people have some rules for how they like to apply the wheel in terms of particular underlyings. Some people like, let's say, an underlying that pays a relatively steady dividend stream. Are there any selective criteria you like to apply for candidates that you think qualify for a wheel you should be looking at?
Yeah, depending on whether you plan to skate or trade. If I plan to skate, if it's a cash secured put, I want to sell it at or below support. If it's a covered call, I want to sell that call at or above resistance. That gives me a little something extra that the options pricing model and all the derivatives of it, like delta and such, selling a particular delta strike, which is kind of silly, really. Like that is what I use for the hold on a second, I got to get over. That is what I use for the skate objective. Now, as far as for the trade objective, meaning I do want to get a sign, not just, hey, I'm okay with it, but I literally want to. I'm always looking, I consider that an entry into, in the case of cash secured puts, or an exit out of, in the case of covered calls, a long-term stock investment position. So if it's cash secured put, I'm looking for a stock that I really like. And I will go as far a lot of the times into digging into the fundamentals, seeing that it has good numbers, that it's, and we can dive deep into fundamental analysis, but I don't think that that's what this show's really about today. If it's a covered call and I want to get a sign, that's a stock that I'm kind of done with. That's a stock that I've owned for a while and it's not performing anymore, or for whatever reason I think it's going to top out. And there's usually some fundamental and or technical analysis that goes into wanting to sell that stock as a result of covered call assignment.
Yes, a lot to unpack there. You mentioned kind of your skate and trade. You mentioned your epiphany in the world of wheels. But let's say, Dan, I put the wheel on, and is my intention to have that first leg turn and to get the underlying. I have the underlying in my hot little hands, Dan. What should I do next? In the MTM wheel philosophy, how do you approach the second leg?
Okay, so this is the other epiphany. I told you there were two. This is the second one. So think again of stocks as a log normal distribution, which is how professors think of it. Log normal distribution with fat tails, leptokurtosis. There's going to be some times when it works out fine, you skate. There's going to be some times when, you trade into it, you don't want to. So here's what we do. We don't actually focus that much on the premium that we're taking in today on a trade. Because, I do what everybody else does. I roll it. If I skate, whether I wanted to skate or wanted to trade, I will roll it out to another covered call. If I get assigned, I'll either let it get assigned and then go into the put, or I'll roll it also. I've got a few tactical things that I like, but let's talk big picture strategy first. We don't focus so much on the individual trade itself. What we focus on is the big picture. And if we have to buy a call, like say we sell, that's a $120 stock, we sell a call for $1. The stock rises and we have to buy it back for $1.90. This is where a lot of traders or investors will be like, oh crap, this sucks. I just lost 90 cents. Notwithstanding, you made that back on the stock itself, but, arguably you're still leaving money on the table. But that's baloney logic. It is not, it's that logic will lead you to trading covered calls and cash secured puts the wheel poorly. What we do is we just simply go ahead and buy that back without batting an eye. It's okay. And we go and we sell another call and collect, 80 cents or $1.20 or whatever it is. And we look at it as a two-step trade, right? So if we collected $1, paid out $1.90, we're down 90 cents on the call. We made money on stock versus it went up, but then we collect another, just call it $1. Okay, well, we just made that 90 cents that we lost back. And for that two-trade system, we made $1.10 on the call, plus or minus whatever it is we made or lost respectively on the stock. So here's the big, that's the big secret, is that it's never about one individual spoke in the wheel. It's about the wheel itself. That is a trade, right? It could be that we sold the call at $1, bought it back at $1.90, and then holy cow, the stock keeps going up, and we buy the call back at $2.30. Okay, so now collected $1, paid out 90 cents. Collected another $1, paid out $2.30, so we're down, 30 cents or 40 cents or whatever it is, right? Okay, so fine. We sell another call, and now it's a three-trade system. So it's about the system itself, all right? And so we're not going to get, one of the big fallacies, and one of the things that people who teach the wheel or people who try and figure it out themselves really fail at is they get so hung up on that individual trade. And they'll take it and they'll annualize it. Oh, look, holy cow, it's a $100 stock. I took in, 80 cents. That's 0.8% a week. Annualize that. Holy crap, man, I'm making 45% a year. This is great. Well, no. In reality, what will happen is if you're making trades like that, taking in, say, 0.8% of the value of the stock, it's not going to annualize out to that. It might annualize out to maybe a third of that. Is that bad? No. That still can come out to 10% a year or something like that. The numbers I used, I guess, comes out to more like 12% a year, right? So looking at it that way, looking at each trade as a spoke in the wheel and focusing on the wheel itself gives you reasonable expectations, not only for the skate or trade component of it, but also for how much is this really worth to me? And not saying, oh, I lost on this trade, I lost on that trade, this doesn't work, give up, and now you're down. You focus on that wheel, and you just keep rolling it out, and you keep going, keep going. And if it's a 2-trade trade, a 3-trade trade, a 4-trade trade, that's fine. We try and develop enough skill to reduce the number of trades it takes to capture that premium. So, if we're looking about annualizing an individual spoke in the wheel, an individual covered call or cash secured put, we probably want to be realistic and take that down to about 20 to 35%. Just to be safe, say 25% of that. So yeah, it sounds a lot less sexy, a lot less impressive, but it's still extremely impressive. You know, I mean, if you can make an extra 5 or 8% on your long-term investments by trading the wheel correctly, holy cow, man, that adds up massively in the long run. You know, like you take the rule of 72, right? And like that says you take the it tells you how many years, given a certain return, how many years it takes to double your money, right? If you're adding an extra 5 or 8% by doing this realistically, holy crap, man! Like, considering this is generally used as a long-term investment augmentation and not a trading strategy, that can have profound impacts on your wealth in the long run. Profound.
I could feel it coming through the airwaves, even in your reduced telephone capacity, Mr. Dan, that you're feeling the wheel. It really has spoken to you. You really did have that eureka moment, sir. I can't remember you being this excited about a strategy in a while. I know you were big with time spreads for a while. That was kind of your big thing around earnings, but it does sound like wheels are, I don't know, where do they fall in your pantheon of your preferred strategies now? Is the wheel the top of the list?
Well, so that's a good question and a good discussion point. So the wheel is an investing strategy for me. Trading strategies are a whole different set, right? So the wheel, I constantly trade arguably every day. I mean, I've been gone for 8 days now, but I did take about 3 of those business days and focused on doing my adjustments. You know, I bought some of them back at 4 cents or whatever, so I went and sold another whatever it was. So that, on the investing side of my brain, I do that basically every day. As far as trading goes, when it comes to earnings season, I'm always doing my total earnings domination time spreads. You know, I do the math to see if I should trade the time spread or shouldn't trade the time spread. Most of them, of course, I don't take unless the math works out. And when it does, it's great. So, yeah, there's that. And, you know, I do my credit spreads and that kind of stuff. But, yeah, for investing, everyone should be doing this, but they should be doing it right.
There you go, listeners. So if you weren't down with the wheel after our first spin at it, pun intended, a few weeks ago, and if you listened to the advisor's option where Uncle Mike and Matt are just going on about the wheel and how much they love it, then perhaps Dan's conversion to the wheel. I love it. Maybe that will lure you to the dark side. Speaking of you folks, let's get out of here with some of your questions, a little bit of the old mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody, welcome to the mail call, the portion of the show where you folks take the reins, your questions, your comments, your insights, your fun gifts, and all sorts of other fun things that you share with us out there. Speaking of fun, we had a little fun with you folks over the last week. We asked you some fun questions of the week, starting with our question of the week from the show last week. It was about your favorite IPOs, the ones you're looking forward to, and indeed new listings you're looking forward to adding to your options trading portfolio. We gave you 4 choices: ARM, Instacart, Reddit, or the new combined entity of WWE and UFC, aka TKO. And 60% of you chose ARM. Not surprising. You folks are all about the chips these days. And then it was a tie for second place, actually, between TKO and Instacart, both 15%. And bringing up the rear, only about 10% for Reddit. So no love there. Kind of interesting. A little bit of a fun, shortened holiday week one. And then over the weekend, this was prompted by my back and forth, one of my co-hosts on our Options Oddities show. We have a love-hate relationship with OTLY, listeners, a stock that has plumbed new depths in recent weeks. So it was a little bit of a joke we asked on the weekend, and it kind of got some traction. We asked you folks, which level will OTLY hit first? It was trading around 70 cents when we posted this. 0 or $5. We just got a little optimistic. And it's like you folks are feeling the optimism. 59.1% of you said $5. Only 40.9% said 0. So there you go, Dan. Are you surprised that our audience is loving themselves a little bit of ARM and also surprisingly optimistic on the future prospects for OTLY. Judging by this poll, sir, I should go out and buy a whole boatload right now.
I honestly have not been following that one, man, but that's pretty interesting. I think I need to start looking at OTLY. I guess I'm not too surprised about ARM. I mean, that's how do you not love the chips these days? But I've got my own homework to do once I get back, which is going to be in like 25 minutes. Holy cow.
Which means, of course, that you need to go, just according to our audience, just go buy a bunch of OTLY and you're done. You don't even need to wheel. You can't really sell puts to get into it. There's no bids on the half strike. Trust me, I looked. So there's no puts to get into it, sir. You just got to buy the stock. All right. Let's go out to our actual question of the week this week, listeners. This kind of goes back to what we were just talking about earlier with the various vol ETPs. We asked you right now, kind of another shortened week. We was inspired by our pro Q&A session yesterday, where we really dove deep into the whole universe of volatility trading products. So I thought we'd ask you folks right now, quite simply, what is your favorite alternative volatility ETP? Obviously, you can trade VIX itself, the options and the futures, but outside of straight VIX, what are some other flavors you might like out there? We gave you SVIX, which is, of course, the inverse vol product, a UVXY, a levered vol product, VXX attempts to replicate VIX with middling results sometimes, and UVIX, which is, of course, another levered product that just went 10-for-1 reverse split, wreaking havoc, I'm sure, with a lot of your options chains as a result. Mr. Dan, do you have a preference in all those, UVXY, SVIX, VXX, or UVIX? And then more importantly, which way do you think our audience is going in this very contentious debate, sir?
Man, I'll tell you, I think I mentioned this on one of our past episodes. Ever since a year or two ago when VXX went temporarily kaput, I dropped out of the volatility product trading game and just haven't gotten back into it. So I don't know. I'm going to take a look. I liked what I was doing with VXX before. So yeah, I don't have a big opinion on it at this point, unfortunately.
Well, our audience sure does. They are voting fast and furious. You want to get in on the action, listeners, add options, the place to go. Clearly a contentious issue with you folks out there right now. And right now, Dan, with 38.5%, UVXY taking the lead. Kind of surprised me. I thought they might go, if you want a levered one, maybe UVIX is just reverse split and it's not neutered. But UVXY is the choice, 38.5%, followed by number 2, SVIX, 28.8%. That's, of course, the inverse product. Been on a bit of a tear of late. Then number 3, we have VXX, 20.2%. And then bringing up the rear, UVIX, freshly reverse split today with 12.5% of the votes. By the way, if you have some legacy UVIX options positions, good luck getting out of those right now. So I always counsel you folks to avoid these reverse splits. I've just been dealing with some legacy positions right now. While Dan was talking, I was pulling a Dan. I was trading while he was talking. And it's a joy to close out some of these post-reverse split position. Let me just put it that way. Brokers still don't understand in the modern era what's going on with these things. All right, let's keep on rolling. Let's go out, some of you folks. Let's go out to Crypto Theo. I like that handle. He was commenting on our last show where we talked about the wheel. So again, keeping it all in the wheel family this week, listeners. He says, I made $760 in options income in September, up from $385 in August, hoping for $1,000 in October, adding to this account every week to push it harder and harder. My goal is $2,500 a month. And he made sure to tweet at us and put hashtag the wheel strategy. So he's a big fan of the wheel, obviously. So Dan, another convert to the wheel. I'm not sure if I'm down with him setting these hard and fast income goals for himself. That sometimes can be the road to ruin, because if you insist on making a certain amount of money, it's going to lead you to maybe selling strikes that you aren't optimal for your position. But that said, Dan, what do you think about a little bit of love from Crypto Theo? Sounds like he's doing well with the wheel, even if he is maybe setting some aggressive goals for himself, sir.
Yeah, yeah, I mean, I agree with you that a lot of times when you set these hard, fast goals, you know, I mean, the market gives what it gives, you know, so sometimes it could force you to be a little bit more aggressive. But, you know, maybe if he's looking at it on that longer term horizon on a month, it's sure better than saying I want to make this much a week. That becomes less realistic because there's just variance in what you can get. So if he's doing it in such a way where it is augmenting a long term investment, I mean you can do the wheel as a trade too, but let me not get too hung up on that. If he's looking at it and saying, okay, I made 300 that week, 700 this week, just knowing that you're never assuming that you're going to capture whatever premium you took in for this week. If you're making the assumption that that's what your profit's going to be this week, it's a big fallacy. Remember, it's a longer term cycle. It could be a 2-trade cycle, 3-trade cycle, 4-trade cycle. So, if you're getting used to taking in $1,000 a week, multiply that times 0.25 or 0.3, and, maybe you're going to end up in the long run taking in $250, $300 a month in the long run. I think if he looks at it that way, it becomes a lot more realistic and sustainable and can help him maybe even trade better. Just look at it on that longer term time horizon. I don't know if a month is really enough time. If you look at it per quarter, I think it becomes realistic and sustainable.
All right, Mr. Dan, that music means we've come to the end of another sojourn, again, through the wheel. The wheel popping up a lot these days. Speaking of the wheel, Dan is at the driving wheel right now. He needs to get back, so we need to let him go, listeners. But, Dan, I'm glad we could tap into your personal revelation, your personal wheel moment. Before we go, if you have any other great personal revelations you want to share with us on the show, sir, now is the time. Unburden yourself. And then B, if folks want to reach out to you with their own thoughts, like Crypto Theo does, on how they like to use the wheel, where should they go? What should they do?
Yeah, I'd love to hear from him or whoever else. You can find me always at markettaker.com. Just click the join free button, and then you can DM me in our chat room. For the time being, it is free. And, love to hear from all our listeners.
There you go. markettaker.com. Don't forget the second T for Theta. If you have questions about the wheel or anything else, you know where to go. That is going to do it for us on the network today. A light day for me, light work. The producer's smiling upon me and my vocal cords. Don't worry, I'm back at it tomorrow. Double dose, listeners. Starting off with the option block, episode 2 for the week. We'll be joined by our buddy, the Flow Master, beaming in from the SIBO to talk about all kinds of flow and analysis. So if you like that kind of fun, you think you're ready to graduate to maybe the kind of 201 level program where we talk about a lot of unusual activity and what's trading and our thoughts and our analysis, then make sure you're checking out the option block. And then after that, for all of you who write in with questions about energy options or metals or crypto, This Week in Futures Options, we touch on all that stuff and a whole bunch more with our friends over there at CME every week, so you should be checking those out. If you're not listening to the full network, what are you doing? There's an explosion of content coming at you every week. Just wherever you're listening to this, upgrade to the full network. The Options Insider Radio Network is what you want to look for in your podcast player of choice. And then hit subscribe or whatever your platform lets you do so you get all the new episodes. And then, of course, on top of that, if you want additional learning and unusual activity in your lives, you want your questions tackled by some of the best minds in the world of options and derivatives, outside of Dan and myself, of course, then only one place to go, theoptionsinsider.com/pro. And then once you're there, hit that join button, and you'll get access to a whole world of fun, including great giveaways. So get in there, theoptionsinsider.com/pro. Then, of course, all the rest of our content, Friday Vol Views, and for our pro folks, Options Oddities. Then we're back again next week, all the way through to next Education Wednesday, where hopefully Dan will finally be done road tripping for another episode of Options Bootcamp. Stay safe out there, everybody.
Options Bootcamp is brought to you by tastytrade. Ready to shred your paper trades? Then trade at tastytrade, the broker that gives you what you need to make your own way. Get smarter every day with options education and research tools. Analyze your risks clearly with a potential profit and loss graph. Chart your way with hundreds of indicators. Make the numbers make sense and find the opportunities only you can see. Trade it with fewer clicks on an easy-to-use platform. Mobile, desktop, web. Supported by a trade desk with decades of combined experience. Stocks, options, futures, and more. You choose, you trade. Get what you need to make smart moves. Go to tastytrade.com/pod to see for yourself, genius. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.